Morning, we'll be starting here in a couple of minutes. As you log in, we'll make sure you open up both your chat pod and your Q&A pod. We'll not be doing polls the way that we sometimes do them. It's going to be done inside of Zoom. So you just need to open the chat pod and the Q&A pod. The chat pod is a one-way. We'll send you links to handouts and stuff like that. Q&A pod is where you can put any questions to Tim.
Looking at the attendees and I see Gary Thorington. I don't know what I could possibly teach Gary Thorington about this.
Yeah, you'd be surprised. We all can learn something. Remember, the goal is to learn one thing.
He's already got his hand up.
He's already got his hand up. Well, I can lower his hand. That's easy. How much snow did you get up there, Tim?
It was lake effect, so it depends on where you're at. Right here in Lowville, we only have about 4 feet. Up in Copenhagen and Denmark, where Pat Mahar is, they got 65.5 inches.
Yeah, they set the records up there. I saw that. Barnes Corners, stuff like that.
Barnes Corners and up through that way really is it. As you know, it's lake effect, so the bands move back and forth, and
Yep.
you can be in an area where there's nothing, and then you're in an area where, whew.
Explaining that to people is hard sometimes. I just remind them, this is a place that goes like you just did. It's only 4 feet of snow.
Mm-hmm.
So we give folks about another minute to get loaded in.
It was great. We had the state contacting us and everyone wanting to know what help they could send our way. And no, it's all good. Everybody's pretty prepared for it.
Yeah, hopefully it'll actually give you a winter. Because last year we got a couple of early storms and that was it. But okay, I think it's slowed down there in terms of new folks coming in. We may have a few other folks sign in. So good morning and welcome. I'm David Orr. I'm the director here. My video is now we got the spotlight on Tim. And we're going to be doing talking about budgeting today. Go ahead and open up your chat pod. That is where we can give you links to a handout, which is some good links and goes through, helps you with the session today. And then also open up your Q&A. That's where we'll be answering questions. And if you've got anything you want to ask, go ahead and put it in there. We'll make sure those questions get answered. Our instructor today is Tim Hunt. He is now the Lewis County Manager. Before that, he was Highway Superintendent in Lewis County, town of Georgetown, and the town of Cazenovia. And you were on a town board before that, right, Tim?
I was on the town board for many years, and town supervisor.
Yeah, so it's a little bit of full circle, but it's got a good background. And we're going to be talking about budgeting. It's general stuff, but it's focused on the world of the highway. So take it away, Tim. I'm going to go in the background myself, and we'll catch up with everybody towards the end here.
Great. Thank you, David. All right, so let's talk a little bit about the budgeting process. Before we do that, don't forget to tune in to some other webinars that Cornell's got coming up. November 12th, the basics of a good road. November 19th, traffic safety. December 3rd, budget basics, which is today. Sources of revenue, December 10th. And then December 17th, pavement management. Check out all their webinars. They're always very informative, and you never know when you can pick up some new information.
And those, by the way, just so you know, are the December ones. We'll have a whole bunch starting up in January as well. So
okay, great. So we're going to start off with the first poll, and that is, where are you from? Town, county, city, village, state, tribal, or a private business? Or do you work for the weekend? And it's a little crazy. I think I've got most of them on that list checked off now. Okay, great. We've got the majority of folks are from the town. A few counties, city, state. Excellent. It's always helpful because some of this stuff is a little different depending on what entity or what municipality we are from. So first of all, why does the budget matter? And when you're talking to town highway superintendents, I think this is a really important question. A lot of them just want to get out and fix the roads. They want to to do the road work. And that's why they ran for the job or came up through the highway department, is they really want to try to make the infrastructure better. They don't want to sit in an office and worry about budgets or plan budgets. And that's the mentality. So why do we have to worry about that? Why should we care about that budget? The board tells us pretty much what we're going to get anyway. Well, that's not always the case. You can't control what goes wrong, so why does the budget matter? I hear that a lot, as well as, if I create a winter budget and we get a storm like we did today, I can't control my overtime. It is what it is. And the amount of material we use doesn't really matter. So how do we wrap our arms around some of those things? Why can't I buy whatever I need if it's in the budget? And that's another question, is once the budget's passed, I can do whatever I want, right? And that is not the case. So there's a lot of things that we need to talk about. And a lot of this is going to depend upon the role that you play, whether you're an administration, you're a highway superintendent, engineer, field crew, board member, or none of the above. So there's another little poll here in the chat for you. Okay, we got one person in administration. We've got a whole bunch of highway superintendents, DPW commissioners, which is great. A couple engineers and a few from the private industry. So that's excellent. So let's talk a little bit about how the whole process works and what it is. First of all, what is a budget? It's a spending plan for the year. And it is that. It is a plan. And we all know that plans go sideways. Plans don't always become what we actually do. But if we don't plan, we have no idea how we're going to get to where we want to go. It's a tool to determine the amount of money to be raised by taxes. And this is a really important piece of this puzzle. It's a tool to determine how much money we're going to tax or we're going to raise from taxes. So if we're wrong on our budget, we can't go back in the middle of the year and ask the taxpayers for more money. We get one chance to do that when we levy taxes at the beginning of the year. And our budget helps us determine how much money it is that we have to levy to raise. It is not spending authorization. So once the budget's passed, it doesn't give you the ability to go out and spend whatever's in that budget. There's some other tools and mechanisms that are your spending authority, and we need to talk about those. Only authorized purchases, they can delegate some authority to the highway superintendent. So the budget does not authorize the purchase. It just sets aside the money available for you, and then you have to follow either procurement processes in your community to go out and actually do the purchasing of that. So you want to follow the procurement policy, and the 284 agreement is a large portion of that, because for most towns, that is your authority to spend a large portion of your budget is your 284 agreement. So that's really where your spending authority comes from. The primary highway official is the one who's responsible for preparing his budget every year, submitting it, and managing. In the town, that is the town highway superintendent, and that is in highway law. In counties, that can be a highway superintendent, it can be a commissioner of public works. It just depends on the charter of the county. Villages and cities as well, it depends. It isn't always the DPW director, but most of the time it is. So you just have to look at the city or village charter to see who is that official person responsible for the budget. Why do we budget? What's most important? The law says we have to. Is it so that we can levy taxes, or is it so that we can communicate with the board? And I'm gonna see what your thoughts are.
Answers are slowly trickling in. So it's ranked most important to the least important.
Let's see what they say. The law says we have to. It's got 13 votes. To levy taxes is by far the highest one, and then communicate with the board. I would say that all of those are equally important. I'd say the losses we have to is probably the least minor. However, there are dates that we have to follow and we have to have things done by. And that's so that the public can be involved in the budgeting process as well, and we do it transparently. But I think the communicating with the board and the public and levying taxes are for sure the most important. So when we get into the budget, we're going to talk about a bunch of different rules and laws, and they come from a whole variety of things. So it's not as easy as sitting down and just opening up highway law and understanding how the budget process works. It can be found in general municipal law. It can be found in town highway law. There's parts of it, if you're in a town, that's where you're going to find it. You're going to find it in town law. You're going to find it in village law. You're going to find it in county law. You're going to find it in finance law, and you're going to find it in local laws. So it is spread out all over the place throughout our laws, the whole budgeting process, but it all kind of pulls together in the same way for every community. And it's basically starts with you as the chief budget officer, and I call it the chief budget communicator or road advocate. A lot of folks, when they become a town highway superintendent, they become elected to that position. And really, if you think about it, what they're being elected to do is advocate on behalf of the taxpayers for the roads, for the infrastructure that they're managing. And they need to communicate with their board, their goals and targets that they've set out for that road system. So one of the things that happens, and I'm in a new role. I'm now the county manager here in Lewis County, and I just got through putting together our first budget. So I'm also in the middle. So I have to go to my legislators before the budget process starts, so way back in the beginning of August, and say, what's the consensus? Are we going to try to hold our spending exactly where it is? Are we going to try to increase taxes by 2%? What's the mood in the room for what we want to do? So once I get the real big picture of what our legislators are asking, then I send out a letter to all of our department heads saying, this is what I'm really asking you to do. We have a surplus this year. We have some fund balance that we're going to use. We're looking for some great projects, some great ideas. This year, we saw that sales tax was going to be flat. It was going to be a little more difficult budget. So we asked the department heads to please try to hold spending as close as possible as they could, given some parameters that are outside of their control. So we start with that assumption, right? I then communicate that to the department heads, which would be any of the highway superintendent. And then he's got to start to pull together all of his plan for next year based on that overarching goal of let's try to keep our spending flat, or let's maybe spend a little bit more. A well laid out budget is an effective communication tool. And what people don't realize is you're actually telling a story with your budget. It's not about the numbers, it's about the story. And what I ask the department heads to do is when you come in with your budget, because I meet with everyone individually and get their budget proposal before I start to put together the entire county budget, I ask them to also come in with a narrative with 5 bullet points explaining what's in this budget. If there's any increases, any decreases, any projects, what's in it that I need to be aware of to communicate to the legislators. This is why the budget looks the way it is. It's a story that we're putting together in numbers, but you need to articulate it verbally. Communication is a two-way street. Seek to understand and then be understood. That's the old Stephen Covey adage on leadership. Traveling around the state, I've been in many town highway departments throughout the years, and you have some where they work very well with their town boards and they communicate very well back and forth. They understand each other's needs. The town boards often are elected to hold the line on taxes. The highway superintendent's there to fix the roads, and often that leads to misunderstanding or miscommunication, or it melts down and there is no communication. That's when budgeting is at its worst. What we want to do is try to increase communication so that everybody really understands the challenges And I will tell you, I've worked with a lot of boards over the years that very few board members will say no if they understand the importance of what you're trying to do. Poll number 4, my legislative members do not understand how much money is needed because they are cheap, they don't have the knowledge, they don't listen to me. They are only concerned about keeping taxes down. They only want to spend what they have to. Let's see what you guys think. What do you think the biggest reason your legislative members don't do what you hope they would in the budget? They don't have the knowledge is the number 1 response. And then below that is they are only concerned about keeping taxes down. And I think that's often the case. They run for election every 2 years, and they are very concerned about the property taxes going up. So that's always on the forefront of their mind. They only want to spend what they have to. I think that's often the case. But what they have to is determined by the story that you tell them. And they don't listen to me. And if it's that they don't listen to me, I would challenge you that maybe you're not communicating in a way that they understand or that makes sense to them. So try to get to know your board members, try to know what motivates them, and try to speak a language that works for them to understand your priorities. All of our budgets are governed by GADSB 34, and that is the Governmental Accounting Standards Board, and it's a modified accounting method. And the reason I talk about this is when you're communicating with your boards, if you're a town highway superintendent, it's often important to understand that this is not the same accounting that you would do in the private sector. So if you're in the private sector, you use GAAP accounting methods, which are completely different. And when you start talking about budgeting, if you have board members who have come from the private sector, which most of them have, or are business people or worked in a business, they're used to looking at profit and loss statements and balance sheets, and they understand them in a completely different way. So you want to make sure that you understand that they're not always coming at this in the same perspective that you are. Budgets in the private sector are built to drive performance. In our case, budgets are built to raise taxes, and it's completely different. So it's important to kind of have some conversations with your board members about these. All budgets in New York State are, because of the GADSB 34 standards, follow certain rules, and they start off and they speak a common language. So they all have an account code. So we all know that DA, for example, DB, townwide, town inside, are all the same no matter what municipality you go to. And that's an important conversation that we're going to have here in a minute. So A, B are general fund A, general fund B, DA, highway fund A, and DA or DB is highway fund B. A, DO, and DM are in counties, AH are in cities, and that is our account codes. From there, we break down those account codes a little bit more specifically. So under A or DA, DB, we would have 5110, which is general repairs right here. DA 5110 is general repairs. DA 5112 is capital repairs. DA 5120 bridges. We all follow the same rules so that when we're looking at your bridge spending, we can look at any municipality and look at DA 5120 and know that that's what you've spent on bridges. So we all use these same account codes and ledger codes, and then we break it down just a little bit farther with the object codes, which is a 0.1, which is personnel services, 0.2 equipment, capital expenses, 0.4 contractual, debt on principal. So if we're looking at 5110.1, we know that that is personnel services. So that is how we break it down, and everybody does that the same way. And at the end of the year, every municipality in New York State must file an AUD, an annual update document. And what that is what actually happened. So at the beginning of the year, you create a budget. At the end of the year, you prepare this AUD. The AUD is what actually happened. The budget is what you anticipate is going to happen, and the AUD is what actually happened. Now you can go to Open Book New York and click on that link, go there to this, and you can look up any local municipality's budget, and you can look back 5 years if you want to look at a trend. And what I always recommend to people, I think this is a really good practice, is find some other towns that are similar to yours. So the same road mileage that you have. If you have 34 miles, try to find 4 towns with a similar population and road mileage as yours, and look those up. Look up their spending and see how that aligns with yours. That's benchmarking. That's to see if your spending makes sense and is in line with what other communities are doing. So it's a helpful tool to try to give yourself a little perspective on what you're doing. By going to Open Book New York, you can do benchmarking. There's transparency so that everybody can see what actually happened, and there is accountability. So if you're spending $25,000 per mile of road and most of the other towns are only spending 10, your community can see that we're spending a little bit more in this area, and that helps to hold people accountable. So budget transfer policy. Once the budget's made, does the money have to stay exactly where it's at? No, every community has a transfer policy. Some of the guidance comes from state statute. Some may be established by local law or policy in your community. There may be specific dollar amount thresholds required. For example, any transfers over $5,000 requires approval from the governing board. The Lewis County here, we have a pretty complex transfer policy. Some transfers, if you have money in safety equipment and you have money in tools, you don't think you're going to spend all the tools, but you want to buy some more safety equipment, you can just transfer that money in your budget up to a certain dollar amount without asking for board approval. If it goes over a certain dollar amount or it's in a certain category, like personnel, you have to ask for board approval. So get to know what your transfer policies are. They're very helpful as you're managing your budget throughout the year, and it's going to be one of the key tools that you're going to need as you're doing this. Transferring from one account number to another often requires approval from your board. You will have to learn what requires committee approval and what requires full board approval. You should avoid doing budget transfers early in the fiscal year. And the reason for that is you just put the budget together. You know what should be happening. Now, 6 months later, what you thought was going to happen doesn't happen, and you need to transfer money into a different area of your budget. Totally understandable. But if it happens in January, my question would be, did you really think through your budget? Did you understand it? Because you shouldn't need to do it if you really, until things start to happen that you didn't have control over. There are different types of budgets. The first one is the annual budget, which has legal implications. That's the one we use to raise taxes with. There are operating budgets. That's your daily roadmap. You're using your operating budget to figure out what you're doing day to day. And then you have your capital budget, which is your long-term plan. So bridges, for example, would be on a capital budget. Roads are on a capital budget, and your equipment usually is on a capital budget. And that's feeding in a certain amount of cost every year into your operating budget. When you buy a plow truck, for example, and that plow truck's $300,000, that is not an expense in this year's budget of $300,000. If that plow truck's going to last 10 years, that is an expense this year of $30,000. That's a capital purchase that should be coming into your budget each year in a smaller amount. Project budgets, that is when you're doing a large project and you want to set your budget up for that. Your fiscal budget calendar, towns and counties are on the calendar year of January 1st to December 31st, villages June 1st to May 31st, and cities January 1st to December 31st. So everybody's a little bit different, but make sure you know what the calendar is. When budgeting, it is best to pick one focus on your fiscal calendar year, plan and budget all year long, highlight a different aspect of your budget at every meeting, do it and forget it. Which method do you guys use? Okay. Plan and budget all year long. Excellent. That is the number one response, and that was the one I was hoping for. And I'll tell you what I do. I use a little note-taking application on my computer, OneNote, and throughout the year, as I'm working, I'm constantly putting notes in for next year's budget. So if I think this is the next paving job, or this is the next chip seal job, or I'm making notes of that, and I'm trying to say, okay, I need to get quotes by August of this year so that I can start preparing for the following budget year, and know exactly what it's going to cost me to do those projects. So I am constantly, whether it's capital equipment, whether it's your maintenance plan, your sealing plan, and your capital paving plans, constantly working on that throughout the year. Budget cycles vary by municipal type. The rule of thumb is that the preliminary budget for the following year needs to be developed no later than 3 months before the end of the current fiscal year. So we passed our final budget in November, and this fiscal year ends obviously December 31st. So we started our budget cycle in August, which is pretty typical for counties and towns. Is somewhere around August, you start meeting with your department heads, you start putting together your preliminary look, and you start the budget process. It is good to continuously review your budget all year long, because as you're going through the year and you're saying, ooh, I over budgeted in this area, but I under budgeted in that area, it's good to then make those adjustments in the next year. And things change as maybe you get a new truck and now your repairs are going to go down. You could take that money and put it somewhere, maybe toward lease payments on another truck. So you want to kind of look at how your budget changes and evolves as you're doing projects. As you get in front of some of your road work, maybe you're going to have less of the repairs and maintenance as well. Budget development. Well, there are many different methods used to develop a budget. The key is to have a thorough understanding of the budget and know what funds you have available. As well, you must have a complete inventory of all your assets you're responsible for and the condition they are in to determine your budget needs. This is one that always kind of shocks me. When meeting with municipalities and I ask them about their highway budget, the first thing I ask is, how many lane miles of road do you have? And usually they know that answer, but then I ask, how many culvert pipes do you have? No idea. How many road signs do you have? No idea. How many guide rail do you have? Nope, don't know. Bridges? Don't know. Those are all really important things to know, because how do you know if, for example, a sign has a 10-year lifespan and you have 100 signs? That means you need to be replacing 10 a year, and that gives you the foundation for your budget. But if you don't know how many signs you have, how would you know how many need to be replaced each year? How do you start to build your operating budget? So the first thing you need to start with is a good inventory of everything that you have that you're responsible for. This is my favorite way to do budgeting. Not everyone uses this. In fact, I'd say very few people use this, but I think it's very good, especially for a new highway superintendent. Because when you come into the job, you're given a set of parameters that this is the way we've always done things. And that might not always be the best. So what if you were given a blank sheet of paper and you were said, hey, you've taken over this job, how much money do you need? And you don't know what they've spent in the past, and you've got to justify every line in the budget. That's zero-based budgeting. All expenses must be justified for each new fiscal period. So I'm going to use this example on salt. When we put in a budget number for salt, people are like, I don't know, I just used the number that we had last year and upped it a little bit. Well, what if you didn't have that number? If I have 30 lane miles of road and I plow on average 110 times a year, that is 3,300 lane miles of road that I'm taking care of. At 3,300 lane miles, if I'm putting salt down at 200 pounds per lane mile, that is 660,000 pounds of salt that I'm going to use. So I divide that by 2,000 pounds, that's 330 ton of salt. 330 ton of salt times the OGS salt number at 63 per ton means that I need $20,790 for the budget. It's very easy to tell that story to a legislator when you do that math. Now, people go, well, I don't know how many times I'm going to plow. Well, if you start keeping track of it, averages make a lot of sense. And I tend to use the 85 percentile. So instead of using the average number of times we plow, I try to look at it and say, all right, 85% of the time, this is how many times we plow. So I'm being a little more conservative with the number, and it works out really well. So once you figure out roughly how many times you plow, what your application rate is, it's very easy to figure out your budget number. And that is zero-based budgeting. You're just starting from scratch and building your budget. The one that most people use is this one right here. It's called historical averaging. And what they do is they say, in year 1, I used 270 ton. Year 2, I used 330. Year 5, I used 250. It was a really light winter. Year 4, I used 345. So the average of all 4 years is 298 tons, and that's what they put in their budget. The pros and cons of that, I think, averages tend to work out. However, we can get very wild swings in our weather. And if you don't have enough money in the budget, you've only budgeted for 298, and you have a really, really hard winter and you need 360 ton, what are you going to do? Right. So if you tend to go a little bit more than average, and that's why I like to use the 85th percentile, because it weights it a little bit higher toward the high end of what you're going to use. Cost of living increases. This is the other way a lot of people do budgets. They use the expected increase in cost and develop a budget based upon this increase. So for example, if they spent $20,000 for salt and the salt price is going from $60 to $65 per ton, you need 333 tons. So to get the same amount, you need to budget $21,666 this year. They just take and go through the budget and go, okay, the salt price is going up, the asphalt price is going up, the emulsion price is going up. So they just add to what they did last year. That's okay. The only problem is you're stuck doing everything the way you've done it in the past. And that might not be the way it should be done. And it might not be getting the results that you want as a highway superintendent. So the best way to break that trend and do something different is to go to zero-based budgeting and tell the story to your legislators. I know on the call here, we have Gary Thorington, and he was trying to convince his board to get away from all sand. He had too little money budgeted in the wintertime for material to put on his roads. How do you tell that story, and how do you tell it in numbers that the board understands to say, yeah, but if we switch to a little bit more salt in the mix, what does that look like? How does that story play out? And that's really what you're trying to do, is have that story, and that's how you affect change. Sorry, Gary, I had to use an example, but I think that's a great example of the struggles that you have. The board doesn't know. They give you a certain amount of money and they say, this is what you have to live with. You're looking at the results and you're going, if I could shift to a little bit more salt, maybe we wouldn't have as much overtime because we wouldn't have to come back in. Or maybe the roads would be a little bit better for the taxpayers. So there's a lot of different conversations to be had around those types of changes. Spending in your budget. Appropriations are a municipality's act of setting aside monies for specific purpose. So once you have a budget, the appropriation is the act of actually setting it aside, but now you need to go and propose how you're going to spend it. Appropriations are reduced as you expend money in the given account. So if you have $30,000 in your salt account and you expend $5,000 for a load of salt, you now have 25,000. That's an appropriation from that account. Appropriations are a municipality's act of setting aside the monies for specific purposes, and they're reduced as you go along.
Tim,
Yes.
sorry to interrupt, but we do
No
have
problem.
a question.
Okay.
It is, what about worst case? Budget for the worst year of the past 5 or 10 years.
I honestly don't think that that is a prudent way to do the budget. And the reason for that is, and I've seen a lot of people that do that. And what you're going to end up with is a surplus year in and year out. You're going to either be turning money back into the general fund, or you're going to be tempted to go, well, I didn't spend it all this year. Maybe I can talk my board into letting me spend it on something else. And over time, they're going to say, we're not going to keep doing that. So I would recommend either, average or slightly better than average, never worst case. It's easy story to come in. If you do zero-based budgeting and you say, I anticipate plowing 110 times, and you come back to your board and it's November and we just got 65 inches of snow up here in the North Country, and we say, we thought we were going to plow 110 times this year, and we're now at 135. And we're running out of sand, we're running out of salt, and I need more money. That's an easy story to tell, but you got to have the data to show them why you're over budget. If you just come in and say, I'm over budget, I need more money, they're going to say no. If you say, I'm over budget because we have record snowfall this year, we're having a hard winter, and here's what's driving it. I think that's an easier conversation. And remember, those conversations are supposed to be being had with your legislators. That's exactly why they're there. If you have a really light winter and you have a surplus, I would recommend you go back to your legislators and say, we have a surplus this year. We can either set it aside for next year when we have a worst case scenario, or we could purchase this, or we could turn it back into the fund balance. What would you guys prefer? You start having those conversations, and you'll see your board start to also reciprocate when you have asks. So it's trying to create a dialogue or a relationship, and I don't think worst case scenario budgeting does that. So, but great question. Okay, now the authority, once the budget's been created and you want to go to spend the money, what are the tools with which you can spend it? You need specific authority to spend any money. The primary tool for budget communication and authority for spending is the 284 agreement for the towns. As soon as you sign the 284 agreement, that is the board saying these specific accounts that you have set aside for road work in the summer, we agree that these are the roads you're going to do. You can go ahead and do that. Without that agreement signed, if you spend any of that money and the board says we're not going to pay it, you are personally responsible. So the 284 agreement is that agreement that authorizes you to expend money and takes you out of being personally responsible for that expenditure. So make sure you get your 284 agreement in place, and then also make sure that you follow your procurement policies. First of all procurement policies must follow New York state law. Goods and equipment is $20,000. Public works is $35,000. Construction projects are $350,000. If they are over that amount, you must go to bid. You must get 3 bids, or you must be buying them off of a cooperative purchasing agreement. And the state is starting to frown on those as well. So general rule is you should be going to bid if it's above that dollar amount. Your local policy can then refine that even farther. And what I call your local procurement policy is the statement of trust between the board and the highway superintendent. If they leave it exactly at the threshold that the state of New York says, and they say, as a highway superintendent, you can go out and buy any goods or equipment up to $20,000. We don't care. Public works contracts up to $35,000. That means they trust you impeccably to be doing the right thing. But that's not how it usually works. The towns usually pass local policy that restrict it even more. And when you go into a community where it's a very restrictive, when I was on the town board many years ago, the highway superintendent couldn't spend more than $20 without board approval because they didn't trust him. And that's the tool that they used to try to hold his feet to the fire. He had to come and ask for any purchase, period. And then they slowly loosened it up a little bit and said you could buy up to $500, but you had to have the approval of the town supervisor. So there's all sorts of ways that they can hold their thumb on you. Another communication tool is your procurement policy. It's a way of communicating back and forth. What are you doing with the taxpayers' money? How are you spending it? And we want to ensure that you're spending it properly. Planning and asset management is another huge component of this. It does not need to be complex. You need to list out what you're responsible for. We talked about that. So what if I'm responsible for 30 miles of road? What is the condition of that road network? What are the costs of that road network? If you had to pave the entire 30 miles of road network, what is that value? The reason that's important is what is the right percentage of that you should be sending on maintenance? So people talk a lot about paving, but what about sealing? What about preventative maintenance measures? And where is the cost benefit? If you're looking at a road and you're trying to determine, should I do maintenance or should I do a capital project of repaving it? You need to have good data about the condition of the road and when is the right time to go to the right process on that road. So the key to that, and I will tell you that I'm a huge proponent in my budgeting of maintenance first. Do your maintenance first and do your capital projects last. We tend to do a lot of capital projects in highway departments and we forget about maintenance. And so our assets are failing at a higher rate than they should be. And if we flip that conversation to maintenance first, it makes planning and asset management much easier. So make sure you know what you have first. Understand what maintenance will do for those assets. So if I have, for example, a cold mix road and I do nothing to that cold mix road, that road will probably fail within 10 to 15 years. But if I periodically seal that road, how long can I make that road last? And if your traffic volume is low enough, you might be able to make that road last indefinitely if it's got good drainage and your shoulders are cut, your ditches are clean. So understanding your maintenance and how that will impact your assets. Repair, keep in good condition. Obviously, if something gets damaged, like somebody hits a guide rail or damages something, you want to get it fixed. Replacement, that is your planned depreciation. So if I have a 20-year depreciation on a road, that means I'm planning on totally rebuilding that road 20 years later. So we plan that out, that expense. So we want to plan for our repairs, we want to plan for our maintenance, and then lastly, we want to plan for the ultimate replacement. And bridges are really good examples of that, right? So there's annual maintenance that you would do to a bridge. You're going to clean it, you're going to seal it, you're going to do any repairs that need, if there's any concrete spalling. And then we know that a bridge is designed for roughly a 75-year lifespan. So we need to be thinking about it at the 75th year, replacing that bridge. So that is all part of the asset management plan. Asset inventory, your highway inventory, you want to have all of your roads mapped. I use a number of different tools, but we have the highway inventory on ArcGIS. That is all of our culvert pipes, all of our signs, every asset you could have. I use an artificial intelligence tool to actually map our road network and give us a rating of all of our roads. And then but you don't need to be all that complicated. You can use just really simple spreadsheets. So I have one on the roads. It just lists out all of our roads, the length of the road, when it was last paved, when it was last sealed, when was the brush mowed back, when was it ditched, those types of things. Just simple so that you know, okay, we did these, and here's the question, in a road network, if I want to do maintenance, and I'm going to use Lewis County for an example, we have 250 miles of road. If we want to cut shoulders every 5 years on 250 miles of road, we need to do 50 miles a year. And the question is, are we doing that? And we're not doing anywhere near that amount. So that means we're not cutting shoulders, but every 15 years. What are the implications of those maintenance cycles? And that's really important to start to understand. And once you start putting it together, you'll start to see that. Once you get your spreadsheet, your mileage, and then start tracking how much of each maintenance process did you do? And I look at it like ditching, shoulder cutting, brush and tree removal, and then sealing of your roads. Like, how often are you sealing your roads? Or is it on a 5-year cycle, a 7-year cycle? And once you start doing that, you're going to start to come to a really tight budget for your highway department. And here's a perfect example of that. Our roads in Lewis County, this is the example I was talking about. If we have 250 miles of road at $300,000 a mile, that means we have $75 million worth of roads. So, and I use 300,000 as a mile of cold mix pavement. And just roughly, we have $75 million worth of roads. We have 3,159 road signs, and they cost roughly $300 per road sign. That means we have almost $1 million worth of road signs out there. And I anticipate them to last about 10 years. My roads, about 20 signs, about 10. Bridges, 89 of them at 1.5 million. We have $133 million worth of bridges with a lifespan of 75 years. Box culverts, we have 36 at 600,000 a piece. That's 21 million, lasting about 75 years. Guide rail, we have 85,967 feet. I use the state OGS rate of $140 per foot. We have $12 million worth of guide rail out there. Not anything that we plan or we maintained. Heavy equipment and trucks, we have 35 pieces worth about 6.6 million. On average, we're going to replace them on a 6-year cycle. And culverts, we don't have completely mapped. It's just about completed. So total asset value of around $250 million. So what does that mean for our annual operating budget? Well, we know that there's cyclical needs. Out of 250 miles of road, if I wanted to pave 250 miles of road, $300,000 a mile equals 75 million. Divide that by 20 years, and that is $3,750,000 a year. And you know what? That comes out to be just about our CHIPS number. So CHIPS is enough to actually do our paving. Our bridges, we have 89 of those, 1.5 million at 75 years. We need to budget 1.7 million per year to manage the bridges. And that turns out to be just about what we get through the Bridge New York program. So our signs, we have 3,159 if they last 10 years, and we have $947,000 worth of them. We need to budget about $94,000 a year. We were not doing that. We were budgeting 30 or 40,000 a year. If we think they're going to last 15, okay, easy enough. Let's just change that. But at least we're now having a conversation of what our expectations are. Our box culverts at 21 million, if they last 75 years, we've got to have about $300,000 a year going toward box culverts. We were not doing that. Guide rail, if a guide rail lasts 20 years, we needed to budget about $600,000 a year for guide rail replacement. We weren't doing any at all. And the guide rail was in really bad condition throughout the county, almost to the point where you didn't know where to start. Our equipment and trucks, 6.6 million. We need to budget about 550,000 a year for a good replacement program on that. And culverts, we haven't done. So our annual need for our highway department, based on those numbers, just on big swag expectations, is about $7 million a year. And that's roughly what our budget is. So it all kind of fits in that taste and smell test. Now the question is, how best do you spend it to get your results? Operating budget is a percentage of your assets. Total asset value is 249,000. Our annual operating budget is 8.7 million, or about 3.5% of our total assets is what our operating budget is. For example, if you had a $200,000 home at 3.5%, that would be $7,000 a year that you're going to budget for your mortgage payment and all the maintenance on your home. Very low, very, very low. So these are the kind of conversations you want to start to have with your legislators to say, maybe 4% or 5% makes sense. And we know we have to take our time to get there. We can't do it in 1 year, but this is what's really happening out there. And the other piece that I recommend is that you put together a report card so that you can actually justify your spending with your legislators. So maintenance activity, if we want to seal a road, we need to seal 41.4 miles if we're going to seal the 250 miles of road that we have every 6 years, we need to seal 41.4 miles of road each year. This last year we did 47, so we met that goal. Road striping, if we're going to do it every 3 years, we have to stripe 83 miles of road. We only did 79 in this example, so we fell behind. If we want to cut our shoulders every 6 years, that's 41.4 miles. We only did 25, so we're falling behind in this area. Ditching, if we want to ditch every 6 years, we need to do 41.4 miles of road. We only did 10. We're falling behind in that area. And trees, if we want to go every 10 years down a road and cut out any dead limbs in that particular road, we need to do 25 miles a year. We did 10. So we're way behind in that area. Brush, with a boom mower, getting that back. And then paving, if we want to pave a road every 20 years, we need to do 12.4 miles of paving every year. We did 10.3. This was the first year I was the highway superintendent, and I went to my legislators with this report card and said, we did fine sealing. We did not do so good striping. We're falling way behind on this. We're falling behind on this, this, and this. In order for us to get to a position where we're hitting the mark on all of those all the time, I need the right equipment, I need the right people, and I need the money to do it. And here's where we're lacking. So it's just starting the conversation of, if we could hit all of those targets, we would have a great road network. But that's the budget and how we put the budget together. This is some information that David had put together at Cornell Local Roads. I think it's really helpful stuff. This is the dollars per centerline mile on average of an urban town, what it costs them in their budget. So if you're in an urban town, roughly $30,000 per mile. The quartile range is from 25 to 49. It's all over depending on the community. Suburban towns, 24,000, rural towns, 15,000, counties, 35,000, villages, 27,000, cities, 31,000. It just gives you an idea. It's not, a benchmark that says this is what you should be spending per mile. The range is very wide, but it gives you an idea of roughly when budgeting, if you have 250 miles of road and we're going to spend $35,000 per mile, this is what we should be budgeting. It's just a real helpful guide. So this is a map that kind of shows that. This is actually the spending of the town by person, money per person. And so you'll see in some of the real rural areas, this spending is very high per person because there's very few people there. And if you look at it, the highway cost per person, it ranges all over the place. It's about $200 per person in towns, $116 in counties, and villages, $133. Here in Lewis County, we're very large geographically, but our population is very low. We only have 27,000 people here, so we cannot meet this mark of $116 per person. We're up on the higher range here. So lots of different ways you can look at your benchmarking. This is town spending as a percentage of CHIPS. And how many towns spend 100% of their budget is CHIPS, and how much of it is a mix of town and county spending. So it's interesting to really look at that scenario throughout. When it comes to municipal budgeting, good communication is vital. It's important to have a good communication with your crew, your board, your fiscal staff, your supervisor, mayor, treasurer, bookkeeper. learn who you need to include or exclude in key conversations and when it should take place. So timing is very important, building that relationship and when to have these conversations. But I used to make it a point when I was a town highway superintendent that I would go visit each of my board members, and I got to know when they were available so that I could go out and sit down and meet with them, maybe take them to lunch or go to a coffee shop and just chat with them about the things that were going on and keep them in the loop so that when the budget season started, it was a little bit easier conversation to have. So communication is vital. And that is my presentation for today. Thank you all very much. Any questions? Throw them in the chat box and we'll try to answer them.
We got one in the Q&A box for you.
That's all fine if you can do and forget. We have ditches we have to clear every year, and forget about if there are bad rains. We would be doing all ditches. I guess, how would you plan for extremes that are not covered by emergencies? If you have ditches that are filling in every year, I would suggest that maybe the process. So when I talk about doing a ditch every 6 or 8 years, cleaning it, I'm talking about maintenance. I'm not talking about a storm washing it out or damaging it. If we have a ditch that's getting washed out and damaged every year, we're going to go back and look at a different way to do that ditch. Maybe it needs to be rock lined. Maybe there needs to be multiple culverts put in. There's some things we're directing too much water too quickly down that ditch, and that's where taking a lot of these classes that Cornell Local Roads offers is really important. When I became a highway superintendent, I had no idea about any of this stuff, and slowly taking more and more classes and learning from the guys who are the experts, that's when you learn those tricks. Like, wow, instead of going and fixing that ditch every year, why don't we do this, this, and this so that we have a better chance of it lasting 5 or 8 years before it gets damaged. Just a suggestion is, the more you learn about the different processes, the better. Also, where do we get an outline of the 284 agreement? David has one right on the website.
I just put a link in the Q&A box. It should pop up for people. Back to the first question you had there, Tim, real quick.
Yes.
I don't know what county the person was from, but they should definitely want to reach out to their soil and water conservation district if they've got an issue that comes back on a regular basis. That service, it's really available really for the price of time.
Yes.
So.
Yep. Excellent.
Reach out to them.
Yeah, as you know, up here in Lewis County this summer, we had extreme flooding, and we have one town that lost 5 bridges. And they're looking at $25 million. That's the kind of extreme that you cannot budget for. And even with FEMA here, we're not sure the town can manage that because FEMA pays 75%. So when you're looking at $20 to $30 million worth of damage and you're going to get 75% of it, the town's share is still more than they can handle. And those are the extremes that you really worry about. And some of those you just can't plan for. We're trying to figure out some solutions for this community because it's just too big a lift.
Yep. I don't see any other questions, Tim.
All right. All right. Thank you very much. Have a great day.
Bye-bye, folks.